the price of gold and silver in Shanghai is 10% or so higher than it is, at least silver is. I haven't looked at gold the last few days, but it's much higher. Yes, in general, it should. The commercial banks shouldn't send it over there anymore. And maybe it's not all coming from the West. Maybe it's coming some from London and Switzerland, not just come from the United States. But yes, in general, that has to happen. I think they're going to revalue gold. I do, in my heart. I do, because you mentioned bringing back manufacturing. Well, how do you do that? How do you do that, Adam? You can't. Really, in this environment, you can, but you can't, because Triffin's dilemma says that, the rest of the world can make that stuff way cheaper than we can. So how do you compete? I guess you do it just for your own country, but it's not a great business if in a globalized world. How do you do it? I think we want to lose the world reserve status. I believe that in my soul. Vice President Vance has said it, wrote about it on White House letterhead, that we're at a point where being the reserve currency isn't such a good thing anymore because of Triffin's dilemma. And, so how do you bring back manufacturing? We owe $28 trillion in 3 years. In maturing treasuries, we've taken $15 trillion in tax revenue. That doesn't even count the trades imbalance or the budget deficit of $3 trillion a year. We're a third of the way there in 3 years. I think they're going to default on the dollar. I don't think they want to be the world reserve currency anymore. In order to bring back manufacturing, what do I mean by that? Judy Shelton, what did she say? They're going to back on July 4th next year. She told me and you this. They're going to issue treasuries pegged to gold, right? Next year. Well, why would they do that? They would do that to have zero borrowing costs on the back end of the treasury market. Zero, redeemable in gold. If you go out to 50-year, like she said would start, there'd be a little coupon on it, plus the gold redeemability. You go all the way down maybe to 10, no coupon, zero interest, redeemable in gold. Well, what does that do? That allows you to have zero borrowing costs to bring back your manufacturing. Now, how do you make your manufacturing competitive? You devalue the dollar. How do you do that? You revalue gold. And if James Rickards is right, or Mike Maloney, he says 10,000, Rickards says 24,000. The president would tell the Treasury revalue gold right now. The Treasury tells the Federal Reserve with no congressional approval, do it. It's held in the gold revaluation account. They put it at 24,000 an ounce. Like Rickard says, this is him, not me. That gives the Treasury Department $6 trillion free and clear. Treasury issues gold certificates to the Fed. The Fed prints $6 trillion out of thin air, devalues the dollar tremendously, gives it to the Treasury General account, who can start to work down debt. The Fed does not have access to that gold. It's collateral, but they only have claim on the cash value of that gold. Now you just massively devalued the dollar. That is what revaluing gold is. That's what Roosevelt did. That is what it is. So now you devalue the dollar and you have zero coupon on the back end of the bond market, so you can bring back your manufacturing inexpensively and sell your goods inexpensively. Well, how do you run the government? Oh, I got a good idea. Let's call it the Genius Act. And we'll have every corporation and bank on the planet start issuing U.S. Treasury-backed, synthetically backed stable coins.
Right.
And that's going to $2 trillion a year. Yes. And so this is how you give demand to the front end of the market. The back end of the market's pegged to gold. And if I'm right, and if Judy is right, you'll see gold higher than you can imagine. Now, the only hiccup in that is a soft default. Richard Russell said for years they can inflate or they can die, they being the Fed. Well, this is a soft default on the dollar in order to reshore manufacturing, in order to at some point grow our way out of this problem with 60% of the country having no college education. We must have that stuff, especially the critical stuff. This would give us the ability to do it. Now, the only thing that I could see in the middle of that would be universal basic income for a few years, because if you don't have assets, you're dead in the water. If you hold your money in dollars, you're dead. Because who's been buying all the gold? Oh, that's right. The central banks of the world have been eating gold at a level no one has ever seen before. These people understand the game. They talk to each other. Just like 9 years of net central bank selling, you started to see the Bundesbank say, give us back our gold. And then you saw the next year, 2018, Dutch, Austrian, Hungary, Turkey, Poland, all these banks did the same thing and bought more gold than they did combined in the 60 years previously. 2019, they doubled that number. And then the BIS says, oh, by the way, Basel III Accord, gold is now tier 1. Oh, really? So you didn't know about that. And you didn't start bringing all your gold home from the New York Fed and the Bank of England and start buying it they know where we're going. And I think they're all clued in by the BIS and the IMF, and they all speak. If I was ahead of a massive deal and you're my best friend, you don't think I'm going to wink, wink, nod, nod, Adam, you might want to buy gold. That's just what a rumor I heard. They do that. And that's why these moves are always very much in front of everybody else. But these moves are so big and so significant and gaining zero media attention that in and of itself is wholly significant. So whatever is happening with the gold and silver market, goes far beyond tariffs. It goes far beyond arbitrage. And that's what we're led to believe. But I bet my life on it that it is many magnitudes higher, more along the lines of realizing that if we don't accumulate the commodities, the rest of the world is and has a huge jump start on us, using our stupidity of suppression of the commodity markets to support the illusion of bond market strength, of dollar and Western system strength, and of the military industrial complex who needs silver for weaponry. All of this stuff makes perfect sense. And I think we got called on the carpet. And fortunately, someone in this administration, I think, convinced President Trump that was the case. And it appears this is what they're doing. So gold and silver, to me, will not only be a life raft, I think they will outperform people's expectation. But I don't sell it that way. To me, it's wealth. Don't buy it to get wealthy. Buy it because it is wealth. And here we are 6,000 years after it was mentioned 400 or 500 times in the Bible, and the biggest money in the world not only is buying it hand over fist, they're removing it from the exchanges, which is the complete absence and removal of counterparty risk, like treasuries were to Russia. Very risky. They can be taken. Well, you can't take your gold if it's off the exchange. And I think that's what they're seeing. The number of gold escapes me. I'll have to look, maybe a couple 100 million ounces a year. Silver is about 800 million ounces that comes to market. But of that 800 million ounces, if we can pull out recycling, which is a little bit, only about 200 of the 800 million comes from companies that mine silver, like First Majestic, as an example. Because silver is found in nature, like your skin is epidermis. Silver is found in a level called epithermal, right near the surface. Big deposits were found forever ago. So 70 to 80% of all the silver that is brought to market comes from companies mining completely different.
Yeah.
Yes, tin or copper or gold. Here's some silver. So yeah, it's depleting in nature. And for 5,000 years, it was 16 to 1 in the ground, 16 silver, 1 gold. Keith Neumeyer has been for 3 years saying it was 8 to 1. Now it's 7 to 1. It's disappearing. 7 ounces of silver for every 1 ounce of gold. So about 800 million ounces of silver. And I think about 250 in gold, I think. Don't quote me on gold, but silver I'm right on. I mean, if you have $12 worth of silver in an iPhone, does it make sense to rip it apart when you're paying more than that per hour for the person to do it? So no, it doesn't. And silver is, most of the silver that has been used for the last 80 years is in landfills, things that have a tiny, tiny bit of silver in the motherboard or within the electrical components. Whereas, yeah, to your point, most of the gold minted since Genesis, or mined since Genesis, is still here. And even gold that you pull out of the bottom of the ocean in a ship from 300 years ago can look brand new.
Right.
But silver, because of its industrial applications, whether in military applications, like 13 to 14 kilos in every cruise missile, down to a tiny bit of silver in the first black and white TV you ever watched. They're exploded or in landfills. And this is why it's gone from 16 to 1 to 8 to 1 to 7 to 1, meaning its geological footprint is decreasing. They think there's a couple 2 or 3 billion ounces of silver above ground, and that's it. You get different numbers from different people, but not a lot. And a lot of it's held in bar form, and you'll get to a point, I think, maybe sooner than, maybe this is what all these deliveries are about with silver, where the industrials, Elon Musk, I need silver for my batteries in my cars, or Sony, Samsung, Panasonic, and the investors, the hedge funds, or the David, whatever his name is that I mentioned, the billionaire, they'll start to battle. Get it. I want to, David Bateman. I want to make money. I need it to make my stuff. And there's going to be a battle between the institutional or the commercial, the manufacturers who need it and the investors. I think that's coming. Maybe It's here right now. If it weren't for the central bank and by proxy commercial bank suppression of gold and silver, it would be massively higher. And it's funny, people on one hand say that its performance really isn't that great in comparison to things like, risk on trade and Nvidia and Apple, where you're getting 3 and 4 digit increase. Gold is slow and steady, and in an environment where the value of the currency is inherently meant to die, like all fiat currencies, it's going to continue to go. And as Rick Rule pointed out, and I've been saying it, citing examples, he said it Rick is just a master of the English language, and is very simplistic too. He says, people think things are getting expensive, but price anything you can think of, from food to real estate, and in gold, and it's cheap. So it's not that gold has made its run, it's that the dollar is continuing to lose its value. And as that continues to happen, the run that people perceive as gold going higher will only be accentuated in the face of a falling dollar. And the dollar will fall. Stephen Mirren, who just got into the vacated spot, he's the head of the author of the Mar-a-Lago Accord. He wants a devalued dollar. Goes back to my thesis. They're going to devalue the hell out of the dollar in order to do these things, and they're going to inflate. The dollar's down 10% this year. So is gold up 10% or 50%? Is it up because gold is up, or is it up because the dollar keeps on falling?
Right.